Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack. Today is October 8th, and then on the Rocket Pool side, we're going to be covering news about the community call that happened yesterday that had a bunch of really cool ideas shared by Langas and Maverick in there. We're also going to be talking about the testing for RPIP63 that's happening, and we're going to be talking about, I'm going to be clarifying some things because I saw some things in Discord today that people who watch Rocket Fuel should really know the answers to those things. So I'm going to be going over that stuff. On the Ethereum side, I'm going to be talking about Pectra timeline potentially kind of starting to emerge for Pectra 1. I'm going to be talking about Aztec and home staker stuff. But one of the things I'm going to be talking about is Eric Balchunas of Bloomberg having a horrible take about Ethereum and the fallback from that. So let's get started.
10, 9, ignition sequence start. 6.
Okay, so the first thing to be talking about here is this update from Langas. So a couple of things here in the beginning of the Rocket Pool section are going to be going back and forth a little bit. There's going to be some overlap, but Langas here put out a protocol announcement overnight saying that RPIP62 tokenomics rework Prelude or Saturn 0 and RPIP63 Houston hotfix votes have reached quorum and are likely to pass. We have deployed the hotfix and Prelude parameter changes to the testnet for beta testing. Obviously, we will not push the changes to mainnet until it is ratified by the PDAO and the vote is concluded. If you have a testnet node, please feel free to beta test the release. As part of the testing, it would be good to test the following things. So normal node operator activities such as depositing, distribution, staking, unstaking, RPL, exits, and closing mini pools. On the testnet, you should be able to create ETH-only mini pools and then raising the PDAO proposals, voting and executing proposals. And Langas says there's the Saturn 0 stuff, but also the bug fixes from Houston that you can start playing around with. And then Langas says we're developing the next reward tree specification to implement RPIP62's dynamic commission feature. So this is not yet live on the testnet. So of course, this is a tree that Patches is still working on. So if you start the validators now, you won't that part of it won't be working. But we'll have to wait, a few weeks potentially before that comes onto the testnet for you to play around with and see if the numbers look okay. But otherwise, yeah, this stuff is really happening. It's pretty exciting that we're going ahead with this. So it's awesome stuff. Okay, if we then move on to the community call that took place last night. So this was a call with Ken hosting, and Langas and Mav took part in this. And Ken asked a whole bunch of questions of Langas and some questions of Mav. But one of the things that came up was, a lot of stuff came up was, this idea of Saturn 0, Saturn 1, Saturn 2, what kind of work is being done towards them. So right now the team is quite hands-off about Saturn 0. It seems like the stuff from their side is pretty much done. What they're waiting to see is for the vote to go through, and then the changes will go through an ODAO vote, and they'll have to ratify the changes to the smart contracts and the upgrade, and then that will take 7 days. And it looks like that will be done around October 24th, and then because that will be a Thursday, I think, in Australia, or maybe Friday morning, pretty much. Langas in the call was saying that the team don't like putting through updates on the weekend because they really want to be around to try to monitor everything and see if everything is going all right and being available for community feedback. So the date that we have now for ETH-only validators going live with Rocket Pool is potentially October 24th. That was the date that we were speculating before. October 28th is the date for that to go live, and hopefully that will be the case. Lang has also clarified that the on-chain voting stuff will be ready to kind of go forward at that point, but they'll want to do some testing and some more playing around with that before they kind of activate it. So it might be a week later that happens. So that then is going to coincide with DevCon happening in Thailand and the Staker Summit. So they really want to get that stuff done before that happens. Samus here in the community had took some brief notes. He says that ideally there'll be milestones for multiple devnets with incremental updates. So this was talking about the Saturn upgrade, and one of the ideas that was shared was the Rocket Pool team would like to start doing devnet updates, kind of like we see on Ethereum. So each DevNet, will spin up a new DevNet for that idea of like major updates that have like been finished and they want the community to start playing around with, then they'll put those in the dev nets. And this is actually really exciting because I think the community can be a lot more involved in the testing process. And one thing that they said was they're not sure if it'll be an open testing ground for people to kind of just play around with, or whether it'll just be open to like select people. I think either of those things will be fine. There are a lot of people in the community who would like to do it and are qualified to play around with DevNet testing. And I think that the community being involved more along the process is actually really cool. So that's awesome. And then it means that we can help more with testing. There were other things that were talked about as well, with like the Ether validators potentially having a Rocket Pool Twitter account, either the reactivation of the old one or making a new one before DevCon. So there's this idea that I think the team wants to go there, saying that we've got all this cool stuff happening, Ether validators, RPL rewards under 10%, but also things like on-chain voting being either active or very close to being active, and also things like a Twitter account and all that. So they want to do a bit of a blitz, a PR blitz, and I think that would be really cool. If that would be really cool. So I'm really excited about that. It's a good community call to listen to. It's only an hour long, so there's lots of little bits and pieces in there, and I really enjoyed it. Mav was also talking about some protocols that are getting interested in using RETH and incorporating RETH into their systems. And he was saying that the next community call will be have NodeSet as the guests. So that's really awesome to see as well. So there's a lot of stuff that's happening, and I think that the team's going kind of like all guns blazing on all these different fronts, and then NodeSet's getting closer and closer to release as well. And I'm going to have a special episode of Rocket Fuel coming out with Rhett very soon, so keep your eyes out for that, open for that one. But the whole community is like kind of going forward full steam ahead, and the team is along for the ride and doing a great job. So definitely want to keep an eye on with some of that stuff. Okay, talking about the rewards tree earlier, Patches here has a small update with his rewards trees, and what he's doing basically is he's working with rewards trees 8 and 9, and then rewards tree 10 is going to be the one that has the rewards for Ether validators. So he's setting up a testing architecture right now where he can kind of like do technical stuff. I don't know the full details of what he's doing, but that basically he's making really good progress with that. And then he was saying that he's going to start working on the rewards tree version 10 work, which hopefully will be done as soon as possible, within 6 weeks basically. I think the next rewards period after one on October 24th is November 22nd, I think, somewhere around there. So hopefully he'll have his stuff done by then. But that's really cool. So he says that there's a small discrepancy with his work, and the Oracle, he says there's a 20-way discrepancy with the ODAO RPL, and there's going to be some little bits of work that'll have to happen for it to match. And then he was just talking about that. So work is progressing on Saturn 0 and all the things that kind of go into that. So that is pretty awesome. Actually, going back for a second to the community call, they also talked about SmartNode version 2 and getting that ready, and transitioning to that hopefully before DevCon as well. So that's another one of those things that is hopefully going to be going live at that point. So the team, like I said, are really pushing forward on all these really cool things, and everyone's kind of doing their part, which is absolutely awesome to see. Okay, so RPIP62, wait, my browser's being really slow for some reason. Let's just start with this. So RPIP62, so RPIP62 has been spearheaded by Halooo, and a lot of the work that went into that was from Halooo, and it's been absolutely amazing that he had this idea and kind of pushed it from ideation through consensus building and into very close to being in production. So one thing that Halooo's been talking about for the last couple of days is kind of figuring out whether how he should be applying for a GMC grant for retroactive funding and future funding. And he actually has come up with, been talking about it in the ETH only LEB8 thread, and kind of coming up with different ideas, different numbers, and kind of talking to some of the main contributors. So the main contributors he has listed as himself, Halooo, Val, Samus, Noshua, Epinef, Scuzzle, Don Fungible Yokum, Ramana, Len of Tower, and Patches. And there's this idea that these people would get $15,000 for their work, but also there would be some funding going forwards. So Halooo actually was able to refine this idea, and it led to an application going through to the GMC. And here it says, the tokenomics rework prelude RPIP 62, and saying that this is a grant in the recognition of all the work that went into RPIP 62. And what does this work build off? It builds off RPIP 49. So that's pretty cool, and talks about all the benefits, the different people in the community, and the people who are going to get some of the money. So here is the amount of work. So Halooo actually spent 97 hours of work on this, and just talking in Discord. Of course, any work on top of that would be extra. And then there's payment percentages here as well for the different amounts that Halooo will get and others will get, and what amounts are contributed, which is really cool. Yeah, and then the second part of this grant is up to $60,000, and this is actually a variable part. So this will all depend on TVL growth for RPIP 62. So what they are saying is for every protocol ETH that is created because of RPIP 62, they want 3 cents. And for every node operator ETH that is brought in because of RPIP 62, they want 30 cents. So saying that this will put total compensation for each LEB8 at around $3.12, which is actually pretty awesome. But they want to, so that's for a new LEB8, and then for a bond reduction from LEB16 to LEB8, for people who now who will be able to do that, they will get 96 cents for that. So the idea is here that if they basically get 20,000 new LEB8s, then they will get $60,000. So that's quite a high bar, for that amount of money. But that is only up to Saturn 1 as well. After Saturn 1, that will then be a whole new thing, and that will have nothing to do with this. So I'm not speaking as a GMC member right now, even though I'm a GMC member, and I'll be voting on this in the coming days. But it looks like this makes a lot of sense, and the work that's gone into it has been tremendous. The whole community's kind of rallied around it, and Halooo has really pushed forward with this awesome stuff. So let's see what the GMC says, but it looks like some money should be coming towards these people, and maybe more as well later. So personally, I would love to see 20,000 new validators coming online, kind of like how we were talking in yesterday's episode, where people were talking about how many validators would come online by the end of the year, and most people seem to think, doesn't mean that's going to happen, right, is that we'd grow from somewhere between 10 to 30%. However, if we get 20,000 validators on by Saturn 1, that would be a 100% increase in the number of validators, which would be mind-bogglingly amazing. So these are definitely things to keep an eye on and be excited about, I think. Okay, going back to the Discord here, and we see that Langus put this post out about legal counsel. So with Saturn 1 and Saturn 2, there's this idea of value capture for the RPL token. In Saturn 1, it will most likely just go to people who stake the RPL with their validators. With Saturn 2, however, there's still a discussion about what's going to happen with the RPL. Now, early on, this was a good 6 months ago, pretty much, I think the idea was kind of put out there is how is this going to impact a legal standing for Rocket Pool, for RPL, what impact will it have on the team, the protocol, the everything along with that. And what we saw was that, the community kind of said, hey, we need outside legal advice to get some ideas about, which systems would be okay and which systems would not be okay, if we had to do a buy and burn, if we had to do liquidity providing, if we did, just vote node operator share for voters, and how that's going to be. Well, it looks like the team finally got some updates on this. So it says, Langer said, I brought this with the GMC and I'll call a couple of weeks ago. We raised the idea of sharing the cost somehow, but that would break down is obviously up for debate, but we would need to get an idea of the ballpark costs. We're working with a very prominent firm and they're providing us with general costing, and we will brief them on tokenomic scope to get specific estimated costs on that work. Any thoughts on scope, outcome that the community want to feed into that would be helpful. And then he tags Schifrin, who's the GMC admin. Samus here then had some ideas. He says, these are my thoughts, but this feels slightly binary. He says, we could use surplus share strategy X in good conscience. We can't use surplus share strategy X in good conscience due to these legal concerns. He says, this sounds kind of silly, but something simple like 1 to 10, how safe legally are the various options? Rate 1 with being clearly breaking the law, 10 with being definitely compliant. So the existing tokenomics pre-Saturn, voter share, buyback and burn, buy and liquidity providing. It says qualitative explanations would help, but then the DAO can account for legal concerns when voting on surplus share strategy before Saturn 1. And he says, put existing tokenomics there, since I don't know that anything is definitely compliant under the currently regulatory environment, but it would be helpful to have existing risk to compare our options against. And he says, lawyers probably just don't give you a 1 to 10 scale for things, but ultimately we have to know if we can or can't pursue an option. Val says, I like the 1 to 10. I don't like the binary questions. It implied assumes existing and voter share are both fantastic. And then Val says that, he's happy to write pro and cons for every option. And I think that's part of what the community will have to do as well, or the team, is kind of make the case of kind of explanation of what's happening in each different value capture mechanism, and, how that is all going to work out for the lawyers, for them to understand what's actually happening so they can give us the best advice. Now, the value capture mechanisms that's most similar to what we have now would be the everything going to the voter share, but the fact is, like, currently the voters get currently RPL stakers get RPL inflation rewards. However, with Saturn 1 and Saturn 2, they'll start getting ETH rewards instead. So there's definitely some big changes that are happening there. So this is going to be one to keep an eye on, but hopefully, the team and the community can kind of work together on this process and put together a good idea of where we stand and where we're going to go forward. But yeah, thanks Langers for providing that information. Okay, next we have this set of questions that came up from Maximus, and then a whole lot of discussion that kind of came after that. So Maximus says, can we get an explain like I'm 5 of fresh people starting a validator? I watched the last Rocket Fuel, but I don't want to get a PhD in Rocket Pool and read multiple graphs to know the optimal way to join. He says, it seems like Saturn 0 is still too risky for my needs. Gas fee, not understanding RPL requirement change, need to exit later for Saturn 1, etc. So can I just start a single validator, ETH only, to get tickets for Saturn 1? I don't want to have to enter and exit multiple times, get burned with high gas fees before. I'm not taking the chance to get stuck in a queue with my ETH locked and higher fees. So I think what happened here was I replied by saying that I've not been doing my job, and like I'm not helping educate people well enough, especially people who are watching Rocket Fuel. So the community then here had some really good ideas. Right, so then we started getting answers from community members to some of those questions, and the idea basically is like this. Okay, if you have ETH sitting idly, then it almost definitely makes sense to stake that. Yes, like I was saying, people here then started answering the questions from Maximus, and the idea being, of course, that if you have ETH on your validators, if you just have ETH idly lying around, then putting that into an LEB8 with Rocket Pool will be way more performant and you will become profitable really quickly. Now with the queue tickets, the way that like this, we'll explain this in a minute, but let's stick with the idea of like how beneficial it is to move it or not. So here, Halooo said that if you have just ETH sitting around, then if there's no queue, which there should really, I doubt there'll be a queue in like the first couple of days or maybe even like the first week, that would require 40,000, well, 1,700 new validators coming online. I think something like that, some huge amount of validators coming online, which would be amazing. But at the moment, it's beyond my wildest dreams that, we'll empty the queue out on day one or something like that. But if we have a short queue, for example, of like, 3 or 4 days, and gas, overnight, even though during the daytime it's getting a bit higher, overnight, if it goes down to like 7 or 8 gwei, you'll still be profitable in 3 weeks' time if you throw your ETH into LEB8s. Now, if you are getting yield elsewhere from that, like if you're getting RETH yield, for example, or if you're getting RV yield, here we have the breakdown for that as well. So Halooo was able to get that information. Like, for example, if you're getting ST yield, which is somewhere around 3%, I think, then if you have 1 day, gas price of 1 gwei and there's 0 queue, then you'll be profitable in 7 days. However, if the gas price is like 7 or 8, then it might take you a month to a month and a half to get profitable. So that is something to keep in mind. But because what happened then is, you'll be getting more yield, but you'll have to cover that gas cost and any amount of time that you lose in the queue. So 3 or 4 days in the queue, and then 10 gwei gas will take 2 months, basically 2+ months to become profitable. However, once you hit that point, then you'll be profitable in perpetuity. And when Saturn 1 comes along, then you'll have to exit that validator. So it's not in perpetuity, really. What will happen is, if we are targeting a Q2 of 25, then Saturn 1, then that's still 5 months basically of profitability potentially there, which is very nice. So it really does make sense for you, especially if there's no queue. And gas is still getting low overnight in that time, that you can throw your ETH into ETH only LEB8s, and you could be profitable quite quickly. Now there's a second aspect here of the queue. What does that mean? So here RPIP 59 is something that not many people are aware of, and this is deposit mechanics. So what will happen is, once we get Saturn and LEB4s, we'll be going down, like all the validators will be able to go down to LEB4s. And the problem with that is that there'll be, potentially 1 million RETH that will be needed to get, or if not more even by then, potentially maybe even 2 million RETH needed to be minted to get all those people who want to get those LEB4s to go through the system. Now the express queue will be a way of prioritizing people who are already in the system and they already node operators, and every validator you get will get a ticket. And the way it'll work is you will use that to kind of beat the standard queue. So that standard queue will be at the back of the queue. So you're getting a fast pass basically. And here it says the deposit mechanics. This RPIP defines the queue structures that govern validated deposits and the overall deposit process for Rocket Pool node operators. The standard and express queue structures give mild priority to existing node operators and initial node operator deposits through a ticket system. This proposal also changes the deposit mechanics. In case of a queue, the initial stake transaction happens only once ETH is assigned. This makes it possible to exit from the queue and receive ETH credit up to the validator is dequeued. So what will happen is, for every validator that you have, you'll get a ticket, and then those tickets can go to the front of the line. And there's some technical details here as well of how it will all work. And actually getting through the queue is quite a straightforward system. So here Val kind of explains it. He says every node gets 2 tickets plus enough tickets to convert the existing mini pools to mega pools at Saturn 1. When creating a validator, you can choose between express queue, using it 1 ticket per validator, or normal queue. And the queue works like this. So for example, there's a queue. So the first person in line will be an express ticket, and then another express ticket, and then a standard ticket, and then express standard, express standard. So even if you are, a standard ticket holder, like if you only become a node operator after Saturn 1, you'll still get processed, but it might just take longer. So for someone like Maximus, if there are someone who's sitting on considerable amounts of ETH, it kind of makes sense to get in on the act before you hit that Saturn 1 limit, which is when things will start getting really profitable for node operators. So right now, the profitability is nice, but with Saturn 1, then especially with Saturn 2, the profitability is going to be like ramped up significantly. And then the main thing will be, getting that RETH demand, and the community is already kind of working on that. So that is how things stand at the moment. If you have any questions for me about the Q system or ETH only validators or anything like that, please ask them in the Rocket Fuel channel and a thread, and then I will do my best to answer them on the show. But one thing that I want to make clear to you all is that there will be no punishment for you setting, like, your existing validators will keep running forever if you want, well, until Saturn 1 really, which is when you'll want to switch. But you will always get that 14% commission, and whatever RPL you have staked, you will start getting rewards for that if the vote passes the way it stands at the moment. Now, for new validators you start, they're the ones that will have that variable commission, and that will come down to depending on the value of the RPL you hold. But that's the key piece to pay attention to, is that your existing validators will still keep getting the 14% ETH commission from the RETH holders, and you will start earning RPL rewards that you don't right now if you're under collateralized. However, it's the new validators you have that will start at 10% and go up to 14% depending on how much RPL you have. So you've got nothing to worry about. If you do have validators, and you're worried about your commission and stuff, you can start them up before October 28th, just to make sure that you're getting that 14% locked in. However, if you are under collateralized on your ETH, and if you want to maintain those numbers, then you want to wait until the 28th, and then you can spin up your validators. So yeah, there's a whole lot going on there. But ask me questions about RPIP 62 or anything like that in the Rocket Fuel thread, and I will put them on the show whenever I get those questions. I'll just make a little section, like, leading up to Saturn 0. I'll be answering questions on the show, so that should be good. Okay, so next we're going to move on to some Ethereum news, and we're going to start with the big news of the day, and this is Christine Kim saying, here are the milestones devs want to reach before the Pectra mainnet activation. So they want to do DevNet 4 launch, they want to do public Pectra DevCon testnet, they want a decision about the blob EIPs, whether that should be moving up to 4 blobs to up to 8, or whether they should keep it at 3 to 6. And then they want to do a DevNet 5 launch, and then they want to have a public testnet upgrades before they have the actual mainnet hard fork. So Christine Kim says, based on this, I estimate the soonest Pectra could go live is March 2025. And then she has a full analysis there, which is the Pectra timeline analysis. So March looks good. That's awesome. And one of the things, well, for the Rocket Pool perspective, is that there's nothing in the Pectra upgrade that Saturn 1 is dependent on. It's only in Saturn 2, basically, that we will have some of the attributes from Pectra that will be utilized, like the forced exits. But this looks great. So if we can get mainnet in March, I think that hopefully will happen. But especially because Pectra was split up into 2, then we should be getting Pectra hopefully then. But if not, I don't doubt it'll be more than April or May at the latest, pretty much. So that is some really good news. Here we've got some more good news from Aztec. So here Aztec is a layer 2 that is building privacy built into Ethereum, and what they're saying is they're committed to bringing privacy and decentralization together. So imagine a world where developers can write programs that use data but take full advantage of trustless, permissionless systems. And says that's what we hear, that's what the roadmap. So they've got a blog post now here, which is their roadmap to mainnet. And here they're saying that we're entering our road to mainnet. So if you are curious about what they're doing to get to mainnet, you can read this blog post, and they're going to have a Twitter post as well. So let's have a quick look and see what they're saying. And here, this their road to mainnet, and they're saying all the different things that they want to do and how it's all going to work. And they've got their call as well. So if you're interested in Aztec and what they're doing, then definitely check that out. And hopefully it's going to be a really useful tool for Ethereum. Okay, so there's been this discussion on staking recently. This has been going quite a long-lasting discussion. And here we have a tweet from Nixo that kind of adds to that. So Nixo says the thing with staking from home difficulties is that people don't have the time or the ability to troubleshoot networking issues and may never know what went wrong. They just know that their family complains about the internet being too slow or that video conferencing was stressful and they quietly gave up. And this has to be maximally easy for the hobbyists to participate. We can't ask a home operator to be expert on network issues, or else we'll just quietly acquiesce to it being a network run only by professionals who can collude, censor, and centralize. So I think this is one of the really great things about the Rocket Pool community is that there's so much support built into the community provided by community members that whenever you have these network issues, there's someone there to kind of help you try to figure it out and figure out what went wrong and kind of guide you through the process step by step. So when I became a node operator, it was like, I didn't even know like the command line interface, and people talked me through it step by step. And because of that, I was able to learn so much more. And what ended up happening was that I was able to, develop those skills over time. But even then, when I need help, I can rely on the community to kind of provide that. One thing that's really interesting here is that Sebastian here has this reply saying that we need to catch up with Sol Luna AVAX, people who want more and cheaper transactions without caring for the future. And also higher requirements necessary. We also need to send signal to expand L1 capacity now and not 1000x in 5 years. The bull market will increase users' demand by a lot, equals high fees. So I think this take is quite limited. And the reason why that is because no amount of scaling on the layer one will get you to where you need to go. And the Solana thing recently has kind of shown that, where you see that they are using things like network extensions now. They're calling their layer 2s network extensions because you will hit limitations on your mainnet. And unless you literally just want one database that runs everything, after that, there's no way to, hit a million transactions per second, for example, which is what Ethereum kind of wants to develop towards without, having a modular architecture. And I think that this is definitely really interesting to keep in mind about this topic. And here, Exatarer has a take saying home staking and everyone being able to verify the blockchain is what makes Ethereum decentralized. If you kill this, you kill the golden goose. Ethereum becomes just another mediocre L1. And specifically because small bandwidth increases on layer 1 are like doing one more lane on the highway, this gets full immediately and will never be a meaningful increase. Layer 2s are how we scale. See how blobs have reduced gas costs on the layer 1 even. But like all good engineering, it takes some time to get there. A settlement network that is used for paying coffee doesn't make any sense. So this is another idea that kind of like just what I was saying is like you need to build in a way that is sustainable long term, even though there might be some short term pressures. And I think that doing things to scale on layer 1 does make sense. However, we need to understand where the unique value proposition of Ethereum is and make sure that is preserved as much as possible to do that. So that actually segues us to our next take really nicely, and this is from Grow the Pie. And Grow the Pie, run the dashboard showing you just how all the L2s are performing and what they're all doing. And Grow the Pie here says Ethereum doesn't have problems. Ethereum has improvements waiting to be implemented. If you remember all the FUD about Ethereum fees, now Ethereum has multiple fee markets serving numerous audiences. By having multiple fee markets, Ethereum benefits from the innovations of competition rather than just having to make one big bet. So here they've got a chart that shows you the different fees that are being paid. So for example, on Blast right now is 0.1 cents, on Base is 0.1 cents, and Starknet is 0.4 cents. The highest fees here are like, on ZK Sync Aero 1.5 cents, on Linear 2 cents, Scroll 3.7 cents, and Polygon 5.1 cents. So this was at the time of their snapshot. And then Ethereum at the time was like $2, basically 200 cents or more. And that just tells you that, this scaling roadmap is working, and there are other issues, that the problems that we have, like composability, etc. Those are improvements waiting to happen. And this isn't wishful thinking, right? Like we're already talking about like this composability across superchains and all this kind of stuff. This is really happening, and this is the kind of thing that we really want to happen. And this with home stakers, if they can keep those blobs going, that would be great. But that's part of the issue is like, how can we safely increase and make sure that everything's happening in a way that we can keep those people kind of coming along with the improvements that Ethereum's making. Okay, next I wanted to share this tweet about Wildcat, and it's not necessarily about Wildcat itself, it's just about new DeFi protocols that are kind of coming online. And this was a tweet thread by 2077 Research, and they kind of tell you about what Wildcat is and how it's working. So they say traditional systems rely on credit scores to assess the risk of loan default and prevent bad debts. But the lack of proper reputation systems in crypto has made replicating unsecured lending in DeFi impractical. So this is our latest report explores Wildcat's approach to bringing under-collateralized credit to DeFi. So first of all, you're seeing things here that you don't see in crypto, right? Like so far is like under-collateralized credit. Well, that means that you can put collateral that is less than the amount of the loan that you're taking, which, traditionally people would just think, oh, you could just run with the money, and that's what would happen. However, Wildcat have kind of come to an approach with this and how they want it to work. So they're saying that traditionally the credit is a backbone of modern finance, and there's been a rapid extension of global banking and then global credit rails. And the issue is securing the financial data because leaks and breaches are inevitable without crypto solutions. And then another problem is that credit bureaus are siloed in the West, so that limits global access. With Wildcat, however, you can trust, but you also verify. So they call it banking, but worse. And here the innovation lies in allowing borrowers to access capital with partial collateral while relying on legal and reputation systems for risk mitigation. Essentially, Wildcat trusts the borrower but verifies through both on-chain and off-chain means. So here then you can have a look at how the protocol is set up and what it looks like. But I think this is like a novel system in like DeFi, and bringing on chain is pretty cool. And I think we're going to get more and more protocols like this coming out in the coming years. But you can read through the thread and like get all the details yourself. And find out how Wildcat works. Of course, I'm not an investor in Wildcat. I don't have any of the tokens. I don't even think they have a token or anything like that. But I just think that it's a really cool crypto tool that you might find interesting to use. Okay, and finally, I'm going to, actually not quite finish the episode, but in the Ethereum section, I'm going to talk about Eric Balchunas. So yesterday, Nate Garassi, who you might know of, talking about the predicting the ETH ETF, saying that what are the best Bitcoin and or crypto 101 books? Like if you had to hand one book to someone who has absolutely no idea about Bitcoin or crypto, which one would it be? So Eric replied to this by saying, for me, it would be the Bitcoin Beginner's Guide by Ben Hart-Freedom. He says, I saw him in a podcast refer to BTC as the second amendment of money and thought anyone who could come up with a distilled framing like that has to be a decent writer. And he says then he was right. However, what happened is he kind of shared some snippets from the book talking about finding this idea of Bitcoin as being money that's protected from all problems in the world, like attacks and such. He says here's one light bulb moment from the book. Honestly, don't know what the paradigm for BTC was based on Cold War era military technology. Decentralized cases make sense though when spelled out like this. And then he shared another tweet here that was deleted. And then James Safeheart replied by saying, these replies are about to be amazing. And Eric says, I don't have time today. I'll just leave up the Bitcoin sections, and he deleted it. However, Samus in the Rocket Pool Discord was quick to act and took a screenshot of what Eric had deleted. And here Jasper kind of shared it in the replies. Well, not actually shared it in the replies, but he shared it as a tweet. So let's have a look. He says, the fact that the top ETF analyst in crypto believes BTC conspiracy theories about ETH is so unimaginably bullish. Information asymmetry is where wealth is born. Eric Wall, can you please explain to Eric Balchunas, one Eric to another, why this is all BS? So what did he actually delete? He says, and then this is in the screenshots he was sharing. And finally, this is the reason why Ether just isn't the same or as secure as BTC. Again, any normal person can understand this writing. That's the key. So this is a section called your off-ramp, right? So it says Bitcoin doesn't rely on any hosted service. It's got 1 million nodes around the world, blah, blah, blah. Talking crap about Bitcoin. And then he says if the US government told Amazon to shut down Ethereum, Amazon would just push a button and poof, most of Ethereum would be gone. Most of its applications wouldn't work. Amazon did this with WikiLeaks, just shut it down. WikiLeaks had to find new servers overseas in order to operate. WikiLeaks also used Bitcoin as the medium of exchange to fund its operations because Western countries cut off WikiLeaks from banking services. So he says Ethereum has another Achilles heel. Any rogue government, terrorist organization, or criminal cartel could kidnap Vitalik and torture him until he gave them all the ether they want. It says blah blah blah. So those are the two talking points, and this is what Eric said that it was reasoning for the understanding that Ether wasn't as secure as Bitcoin. So Jasper basically said you have time to spread misinformation. You could spend 30 minutes in any of the last 5 years learning about this. The DAO attack, dude, seriously, Amazon FUD, you have access to people who actually understand how this works. Stop being lazy and ask someone to explain these topics to you. For reference, you cannot force a fork, and you can't shut down proof of stake even if the cloud services went down at once. And then, so that was the screenshot. And then Anthony Sassano got involved. He says, for those wondering, this is the tweet Eric deleted. Absolute blatant misinformation and pretty much complete propaganda. You should be utterly ashamed of yourself for even sharing this. And you only deleted it because you didn't want people calling you out, which of course is what he said he did. And then he got ratioed really badly, basically. Like, the original tweets had 20 or 30 likes, and Sassano's had 300. And then, actually, Sassano actually did a really cool job here. He says, from today, I have a standing offer to anyone in any position of influence within the TradFi ecosystem to hit me up if they want to learn about Ethereum. I'll explain what Ethereum actually is, how it works, and what makes it valuable. And I'll do this for free. Just DM me. And then Hani Abu replied by saying, if only the news would stop asking Bitcoiners to come on and be interviewed for Ethereum segments. And Sano says, I'm still hurting over Pomp being the one to cover the ETH ETFs on mainstream media. And after that, Eric Balchunas kind of replied to Jasper. Item Wood said, Ethereum has been a ghost town since the Bitcoin all-time high in March. Whales been distributing for the past 6 months. Retail doesn't feel like being bag holders anymore. And so this is the only reply Eric made to this whole process, saying, pretty much, I thought I was going to see muted interest relative to BTC ETFs, and I got attacked for it, but I was right. And then Jasper came out again and said, I respect your ETF takes. I think it's entirely likely you were right about backroom politics leading to sudden reversal that could not have been predicted beforehand. Yet you're doing a disservice to the entire crypto community when you make misguided statements. There are many people in both Bitcoin, Ethereum, and Solana ecosystems that can explain to you in great detail why the book you quoted is deeply, dangerously wrong. Ask Toli or Mert or Bitcoin core contributor. Ask Eric Wall. Hell, I bet Vitalik or Danny Ryan or any of the Ethereum researchers, core devs would be happy to walk you through it. The opportunity space for humanity here is massive, and we should be doing all we can to support each of these ecosystems, at least with honest reporting. Hani Abu replied by saying, narrator, he decided to stay ignorant and not seek the truth. So this was a huge call out to Eric with his takes. They were really, really bad. And then Jimmy here said, kind of replied to that saying, why did you share that screenshot with 10 lies in it? It's shameful. Hey, remember that time 5 months ago when I was kind of right though? So it's just complete missing the point. And he was actually quote tweeting his own post saying, boomers will read don't trust verify in a book, not agreement, then turn to the next page and share the most propaganda-ridden paragraph ever without asking themselves any questions about the veracity of the claims towards competition. So this was, I think, maybe a point for Eric to see if he wants to improve his learning, or maybe he just wants to keep drinking the Bitcoin Kool-Aid and fall down that rabbit hole, in which case that would be a huge waste. Okay, and finally we're going to end with some wider crypto news, and this is a 1-2 hit So this was the first one that Crypto.com received a well notice from the SEC. So they are most likely being targeted for trading tokens that the SEC is calling securities. That same bullshit over and over again. And the interesting thing is this story came out at 9:22 a.m. Eastern time, and then at 9:27 we got news that Crypto.com has actually filed a lawsuit against the SEC, and they're the ones who are actually bringing note to the SEC. So here they say that it's a decision to sue the SEC following receipt of Wells' notice from the Commission itself. The lawsuit contends that the SEC has unilaterally expanded its jurisdiction beyond statutory limits, and separately that the SEC has established an unlawful rule that trades in nearly all crypto assets are securities except BTC and ETH. So Gary Gensler is going to be coming under some fire here, and I like that these companies are like showing a lot of backbone and being like, hey, if you're looking to sue us, actually we're going to sue you first. And it was consensus that really took this step a little while ago, and like others are doing that as well. So more power to these companies. But on that note, I'm going to end today's episode. So thank you all for watching, listening, and being part of the Rocket Fuel community. And I'll be back tomorrow with more Rocket Pool and Ethereum news for you to all enjoy. Bye.